Hi, this is Bob Gersh from East Coast Capital, and today's blog is on what past recessions tell us about the housing market. It doesn't matter if you're someone who closely follows the economy or not. Chances are you've heard whispers of an upcoming recession. Economic conditions are determined by a broad range of factors. So rather than explaining them each in depth, let's lean on the experts and what history tells us to see what could lie ahead. As Greg McBride, chief financial analyst at Bankrate, says, 2 in 3 economists are forecasting a recession in 2023. As talk about a potential recession grows, you may be wondering what a recession could mean for the housing market. Here's a look at the historical data to show what happened in real estate during previous recessions to help prove why you shouldn't be afraid of what a recession could mean for the housing market today. A recession doesn't mean falling home prices. To show that home prices don't fall every time there's a recession, it helps to turn back historical data. Looking at recessions going all the way back to 1980, home prices appreciated in 4 of the last 6 of them. So historically, when the economy slows down, it doesn't mean home values will always fall. A recession does not mean falling prices. During the last 6 recessions, only twice in that time period was there a falling amount. 1991, 1.9%, and in 2008, 19.7%. But in the other years, there was an increase. Actually, in 1980, 6.1%, 81, 3.5%, 2001, 6.6%, and in 2020, 6%. Most people remember the housing crisis of 2008. The larger of the 2 red bars in the graph that you can find under my blog under askbobgersh.com. And they think that recession would be a repeat of what happened to the housing then. But today's housing market isn't about to crash because the fundamentals of the market are different than they were in 2008. According to experts, home prices will vary by market and may go up or down depending on the local area. But the average of the 2023 forecasts show prices will net neutral nationwide, not fall dramatically as they did in 2008. A recession means falling mortgage rates. Research also helps paint the picture of how a recession could impact the cost of financing a home. Historically, each time the economy slows down, mortgage rates decrease. A recession means falling mortgage rates. The mortgage rates changes during the last 6 recessions. It was actually a decrease in the rates in 1980 of 4.2%, 1981, 5% decrease, 1991, 2.25% decrease, 2001, a 0.63% decrease, 2008, 1.13% decrease, and 2020, a 1% decrease. The Fortune magazine explains mortgage rates typically fall during an economic slowdown. Over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage points from the peak seen during the recession to the trough. In many cases, they continue to fall after the fact as it takes some time to turn things around even when the recession is technically over. In 2023, market experts say mortgage rates will likely stabilize below the peak we saw last year. That's because mortgage rates tend to respond to inflation. And early signs show inflation is starting to cool. If inflation continues to ease, rates may fall a bit more, but the rates of 3% and the days of rates 3% are likely behind us. The big takeaway is you don't need to fear the world is in a recession or the word recession when it comes to housing. In fact, experts say a recession could be mild and housing would play a key role in a quick economic rebound, as the 2022 CEO outlook from KPMG says. Global CEOs see a mild and short recession, yet optimistic about global economy over a 3-year horizon. More than 8 out of 10 anticipate a recession over the next 12 months, with more than half expecting it to be mild and short. Bottom line, while history doesn't always repeat itself, we can learn from the past. According to historical data, in most recessions, home values have appreciated and mortgage rates have declined. If you're thinking about buying or selling a home this year, let's connect so we can have expert advice on what's happening in the housing market and what that means for your home ownership goals. Again, this is Bob Gersh from East Coast Capital. You can check out askbobgersh.com, my blog site. Let's try that again. Askbobgersh.com, and check out my blog site and be able to read what I just said on this podcast and video cast. If I can be of any service of any nature to you, feel free to give me a call, email, or contact me any way that's on my site to be able to reach me. Phone works, email works, other methods that are on the site also work to reach me. And let's have a chat, maybe have a cup of coffee. Again, Bob Gersh, East Coast Capital. Have a great day and a great rest of the week.